Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Giga Gulf. The U.S. announces a 5 gigawatt AI data center plan with the UAE as President Donald Trump rounds out his tour to the Middle East with another $200 billion worth of deals. No deal. Trump says nothing will happen on Ukraine until he meets with Russia's Vladimir Putin. And JPMorgan CEO Jamie Dimon tells Bloomberg he is not going to take the chance of a recession off the table as erratic trade policy continues to heap volatility on markets. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. What a week for the GCC. We're coming up to the end of a whirlwind trip for President Trump. His last few hours over here in the UAE. And, of course, lots more headline figures coming through from the UAE and what has been agreed to there. We'll get to that in just a moment. As ever, kicking off the show with markets, though, we're trading a bit sideways. You can see the S&P is barely budging this morning. Similar theme for NASDAQ. Though over the course of the week, we did see a big rebound. Of course, a lot of that happens in the front end of the week, Monday, Tuesday, after those positive, constructive talks between U.S. and China. So that sort of set the tone for trading. Over the week, S&P is up 4.5%, and NASDAQ up 6.6%. I also took a look at NVIDIA as well. That stock is up 15% this week, AMD up 13%. And a lot of the boost for those chip makers is actually on back of the news that's been coming out of the region and the fact that so many of the AI data centers here are going to be powered by some of those chips from those chip makers, NVIDIA and AMD. So bullish for chip maker stocks in the U.S. 10-year yields, we rallied quite a lot yesterday, about 10 basis points on the day. So we're through 4.5 now, 4.42 is where we're at. Surprising numbers to the downside, both on retail sales and on PPI. PPI numbers actually declined in April for the most in 5 years. So that's quite interesting. It suggests that companies are absorbing some of the hit from higher tariffs. But on the back of that, we did see that massive rally in fixed income. And then Brent today stabilizing. We're about 0.1% higher. And of course, yesterday we did see that big downward move after President Trump suggested that the U.S. and Iran are close to a nuclear deal. Today, stabilization coming through. We are sort of eking out a gain for the week, up around 1%. But for the year, we are down 10% still. All right, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio and some data to digest this morning. Avril.
Yeah, I mean, we've been looking at the start of the week. The picture that emerged was really one of optimism, right? When it comes to the U.S.-China trade truce, when it comes to the signs of U.S. economic resilience. But the picture at the end of the week is really quite different. I think you were just alluding there to what we got out of Japan. But overall, when it comes to, the kind of sideways trade we're seeing, it is maybe some caution as to the progress that we can ultimately see between the US and China on trade talks, and investors, I think, turning more realistic about, the trade deal after this 90-day reprieve. So Japan sitting a bit softer. The drag, though, today is coming from Alibaba, and this is after investors, kind of built up this expectation after Tencent, JD, solid earnings, right, all of this week. But then Alibaba kind of disappointed. Its growth didn't impress, and this is a stock that's climbed about 60% so far this year. So a bit of a miss when it comes to meeting expectations. Certainly that's what we're seeing in the Asia-Pacific today.
Interesting. Michael Burry, the famous investor, also overnight it emerged that he was also buying puts on some of these Chinese stocks and NVIDIA too. Avril Hong in Singapore, thank you so much. Now, President Trump has secured $200 billion in deals during a visit to the UAE. It includes investments in AI, aircraft, oil and gas, as well as metals projects. These agreements build on a pledge from Abu Dhabi to invest $1.4 trillion in the U.S. over 10 years.
We have now, I think, substantially over $10 trillion of investment. And now when I add the $1.4 trillion, we easily break that number. So that's investment or investment that we think will soon happen.
For more, Stuart Livingston Wallace, our executive editor for MENA and Russia, joins us now. Wow, some more headlines coming through from Trump. This time he's saying, I think, $1.4 trillion of commitments from the UAE over the next 10 years, but $200 billion worth of deals. There's a big difference between what you're pledging versus what you're actually committing to. So maybe let's just talk through some of the highlights from an economic perspective of what President Trump got here in the UAE.
And I'm going to forget lots of things because the list of things they've discussed this week, as you know, is vast. So forgive me when I forget the really important ones. But, I mean, in no particular order, I think the big one is AI, at least on the business side. I mean, that is widespread. It's across Saudi. It's probably going to involve a bit of Qatar. It's probably going to involve the Emirates. And all of that combined, if it comes to fruition, strongly underlined, is basically going to vault this region into the same sort of sphere as the US and China when it comes to AI. So there's a couple of things here. One, they have deep pockets. Two, they are desperate to get their economies away from oil, absolutely determined. You know, we've seen that across the board. And they have the energy and the willpower to be able to do this. So, I mean, certainly from the Gulf side, they absolutely want this to happen. Now, the question is, can they get this through Washington?
Yeah, I was just saying on the AI, I was looking at the numbers. The AI campus that they want to build and that they announced overnight is 5 gigawatts capacity. I'm not an AI expert, but I was speaking to Tom McKenzie, our colleague in London, who is more of an AI expert than I am. And he says that that is the equivalent of powering 4 million homes. It is absolutely huge and would be larger than any other hyperscaler data center around. So it really speaks to the ambitions of what the UAE want to do in that space. Let's just do, perhaps, Stuart, maybe a fuller recap of the week, because we are coming to the end of the week now. Would you say this week has been a success for the Gulf countries?
Huge. I mean, I think beyond their wildest dreams, and not just the fact that this is Trump's first scheduled visit outside the US. Obviously, he went to the Pope's funeral, but that was unplanned, obviously. But the things he said as well. So he gave them pretty much everything they wanted, right? Access to AI, a warm embrace and huge praise, you know, down to including the type of marble that they were using inside their palaces, which I thought was kind of interesting. But the fact that he strongly signalled that the US has their back, right? And he kept saying it again and again and again. And I think that's something that they've been missing since the Obama era, is some sense that the US will have their back if things go wrong. And, you know, we're in the Middle East, inevitably they're going to go wrong sooner or later. He gave them access to weapons. He gave them access to so many things.
What about the political breakthrough and the fact that Syria got so much attention this trip? Do you see this as a significant political development in terms of how the Trump administration is thinking about their strategic priorities in this region?
Yeah, and I mean, we were initially quite sceptical in the sense that there's 45 years of sanctions to unpick here. He can reverse the ones that were done through executive order. He needs Congress to do the rest. But very interesting that Mark Rubio came out last night and started talking about this 180-day pause, something along those lines. So there clearly is political will to get that done as well. Again, can he get it through Congress? That's a different matter. But interesting, that does seem to have some traction, and that's going to change the balance of power in the region. You know, you take one more country out of Iran's orbit, that is going to significantly change the equation. Yeah,
and ultimately that's what they're looking to do, to bring more countries in the region into the U.S. Gulf allies orbit as opposed to the Iranian sphere. Stuart, great to have you on. What a week it has been over here in the GCC. Stuart Livingstone-Wallace, our executive editor for MENA and Russia. Well, hopes faded for a Ukraine ceasefire after Russian President Vladimir Putin sent a low-level delegation to talks in Turkey. President Donald Trump says there will be no resolution until he meets with Putin.
Nothing's going to happen until Putin and I get together, okay? And obviously he wasn't going to go. He was going to go, but he thought I was going to go. He wasn't going if I wasn't there. And I don't believe anything's going to happen, whether you like it or not, until he and I get together. But we're going to have to get it solved because too many people are dying.
I was thinking about going, but it's very tough because of what we're doing today and tomorrow. But, you know, if something happened, I'd go on Friday if it was appropriate. But we have people right now negotiating, and I think that I just hope that Russia and Ukraine are able to do something because it has to stop.
For more, let's bring in Bloomberg's Tony Halpin. Tony, these were supposed to be the first direct ceasefire discussions between Russia and Ukraine in 3 years. And there was perhaps a lot of optimism and hope that maybe we could see a breakthrough this weekend. But it feels as though now those hopes are beginning to dim because of the delegation that Russia have decided to send.
Yes, good morning. That's right. I mean, essentially, Russia sent, as you've noted, a low-level delegation that caused Ukrainian President Volodymyr Zelensky to pause yesterday and actually to describe the Russian delegation as a sham, and said that they weren't really interested in discussions. Eventually, he decided that he would send a delegation for Ukraine to these talks. They're due to get underway later this morning in Istanbul. Both sides are coming to the table with very different agendas, however. The Russians want to discuss a set of demands that they say Ukraine agreed to way back in 2022. Ukraine disputes that, and those talks broke down over that. Ukrainians are coming to the table essentially to negotiate a ceasefire. They say that until there's a truce, they can't really discuss anything else. So as a result, the expectations are quite low that they can reach agreement. Secretary of State Rubio is in Istanbul today as well, but he's not expected to take part in those talks. Instead, they'll have US officials or what they call an appropriate level present.
I believe President Trump almost said yesterday, or in some way, I'm paraphrasing, but there won't be a deal unless he meets with Putin face to face. What does that tell you about how the U.S. views its own role in getting the ceasefire across the line?
Yes, very much. Trump has believed that essentially he's the one who can make this deal, and there won't be any deal until he and Putin sit opposite each other at the table and figure out what needs to be done. The US has made a number of concessions already to the Russian position, and Putin hasn't really responded. He's held back from announcing a ceasefire. Ukraine and the Europeans wanted him to commit to a 30-day ceasefire. He didn't do that. He offered talks instead. And so the Kremlin very much, I think, wants to sit down with Trump, and that's one of the paradoxes here. Both Russia and the US are saying that only Trump and Putin can get this done, but neither of them seem able to commit to sitting in front of each other and discussing an outcome that would end this war. So Trump didn't entirely close the door about coming to Turkey, so we'll see if that stimulates Russia to respond.
Tony, I want to just rewind back to that famous or infamous Oval Office meeting between President Zelensky and President Trump. We have come a long way since then. It feels as well as though the relationship between the two has progressed a lot since that moment. Ukraine have signed on to that critical minerals deal and essentially are showing good faith in terms of wanting to have discussions with Russia. So how does that set up Russia vis-a-vis these ceasefire discussions in the eyes of the U.S.? Because Zelensky is doing the things that President Trump wants to see.
Yes, that's right. And that's very much Kiev's argument that, in fact, the obstacle to peace here isn't Ukraine, that it's Putin and he's not budging. And there is some sense, I think, in the U.S. that view is beginning to take hold more within the White House. There's a lot more discussion now about whether they need to turn to sanctions as a measure to ratchet up pressure on Putin to come to the table. The Kremlin's response has always been that they're not moved by sanctions, and therefore new sanctions won't really do that job. But it's a puzzle for the White House, really. What will it take to bring Putin to the table? And as Trump has acknowledged, nothing's really going to get done until Putin does come to the table and sits opposite him. So the US faces a choice, really, whether they continue to sort of incentivize Putin or turn towards ratcheting up pressure on him with sanctions that would be a punishment for Russia.
Yeah, Bloomberg's Tony Halpin, thank you so much for the preview on what to expect in Turkey today. Now, still ahead, hear why the Bank of Singapore expects the Fed to cut just once this year, despite markets pricing in two. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Asian equities and U.S. futures fell on Friday following a week-long rally in global stocks as traders priced in 2 Fed cuts this year. Joining us is Mehvish Ayub, a Bank of Singapore's head of managed solutions advisory in Dubai. Taking a look at the price action in equities this week, the last couple of days we sort of stabilized, but over the course of this week we've seen a massive rally back on back of optimism around U.S.-China trade talks, other trade talks with India, progress there, UK deal as well. Would you say that the optimism is now fully priced in to these markets? Is that why we're stabilizing towards the end of the week?
Good morning, Jemana, and thank you for having me on. I think if we think about the investing regime post-Liberation Day, it's markedly different to what it was before. There's significant volatility, and I think there's a lot of headline news and a lot of reaction to that headline news. But if you actually step back and think about the fundamentals and the time periods involved, it still isn't a very rosy picture. So if we think about the sort of significant rallies we've seen over the last week, they do hold, but they are in response to day-to-day news. And at the end of the day, over the next week, we could get different news which could turn the markets in the opposite direction. Personally, I think where markets are right now, I don't think that they are adequately pricing in risks over the medium term.
Though the S&P is 4% away from all-time highs, the market participants seems to think that the worst is behind us. Where do you think the biggest downside risks are going to come from?
So I think we could split them really into two categories. The first is geopolitics. So we're obviously still subject to the whims of what occurs with the trade wars. Let's think about the US-China talks for now. So we definitely have this 90-day reprieve, and we had a huge relief rally. But at the same time, it's very difficult to come to any sort of official trade deal, given the variety of sectors that are involved between the US and China over 90 days. That's just pragmatically what any political analyst will tell you, that 90 days is sort of pushing the buck down the road. It is at the end of the 90 days, we'll have to wait and see what happens. Is there a further extension, or does something occur within that 90 days that actually puts that sort of base level of tariffs that we're seeing right now at risk? I think the assumption of the market at the moment is that everything...
I was going to say that hasn't this administration shown to be flexible, though? Because when things got really bad and when we had that week of a massive sell-off and the huge bond market volatility, in the end, the Trump administration did react. They announced that 90-day pause. We know that Scott Bessent is out there leading these discussions. And even President Trump in his speech earlier this week was saying that when Scott Bessent speaks, the markets listen. So it's not just a change in prerogative, but it's also a change in tone out of the Trump administration.
I think you're absolutely right. And I think we do have to acknowledge that there is more flexibility, and certainly there's more sensitivity to what is happening in financial markets, which wasn't the case earlier on, which is what I think really impacted sentiment in the markets. But nevertheless, we are still subject to day-to-day news. And I would say that the credibility of US policy in general has taken a bit of a hit. You can't reverse what we saw post-Liberation Day and that continuous sort of tit for tat that we saw between US and China. So yes, there is a certain level of backtracking, which I think is a welcome relief. But I don't think that over the medium to longer term, you know, the absolute base case scenario of tariffs is still increasing from around 2 to approximately 15% for the US, which does imply higher inflation and lower growth prospects for the US.
Yeah. How are you feeling about the outlook for Chinese stocks from here? Hang Seng up 16% year to date. So it actually has had a good start to the year despite all the volatility. Can that continue?
Yes, so that is actually a core part of our asset allocation calls from our Chief Investment Office. So we are overweight European equities and overweight Asia ex-Japan, and that specifically has a view on Chinese equities. And I think when we look at it, we've got more of a barbell approach. So we're looking at sort of high quality, but we're also looking at internet and consumer names that are beneficiaries of the changes in policy. I think we've also seen some good effort from the PBOC to sort of ease policy, and I think that was strategically positioned just before the trade talks in case the trade talks did not materialize in a positive manner. So you can see that the PBOC is definitely thinking about bolstering sentiment, and all of that combined, I think, improves the outlook for Chinese equities.
Mehvish, thank you so much for joining us today. Great to hear your views. Mehvish Ayub, Bank of Singapore's Head of Managed Solutions Advisory, Dubai. Thank you. Well, JPMorgan's Jamie Dimon warns a U.S. recession remains a real possibility amid the tariff fallout. We hear more from his exclusive interview with Bloomberg next. This is Bloomberg.
We have all this uncertainty. You know, some preceded the new administration, like we had large deficits, interest rates going up, inflation going up, and some are, tariffs and things. And of course, the geopolitical situation is very tense, very difficult, and hard to resolve.
Okay, so if you forget projections, numbers, what's your hunch? Is the U.S. going to go into recession or not?
Look, I'm going to defer to economists who give it about a 50% chance. I think all these things are probably inflationary a little bit more and slowing down the economy. If there's a recession, I don't know how big it'll be or how long it'll last. Hopefully we'll avoid it, but I wouldn't take it off the table at this point.
If you look at the trade war and then the somewhat reconciliation between the U.S. and China, does it hold?
I think it's the right thing to do is to back off of some of that stuff, to have an engaging conversation. I'm grateful they did the U.S.-UK deal. It's an agreement in principle, so, there's a lot of uncertainty still, and there's a lot of uncertainty still in the China thing, but at least we started. It obviously calms down the markets. That's not the reason to do it, but the markets, do vote and something like that, and so you'll still have uncertainty to resolve. There's 90-day triggers in a lot of these things, and hopefully they will be resolved. But they're complex. I don't expect immediate resolution, to the satisfaction of everybody in 90 days.
But you expect markets to settle from here because we have a little bit more of a blueprint, or could volatility pick back up at any second?
Markets are quite unpredictable. I think there's a lot of uncertainty out there that you can't discount. War in Ukraine, terrorism in the Middle East, Iran. Huge deficits, our tax bill, which I would like to see a good tax bill pass. The tariffs, the reaction of countries to tariffs. The EU and the UK are about to negotiate, and I think they have a chance to actually develop a great relationship, partially making up for, the disaster that Brexit became. And those are uncertainties. You can't eliminate them because you want to.
But what are your biggest clients saying about this market volatility? Have they made money on the back of it?
Yeah, some do and some don't, and volatility could be good or bad depending on who's facing it. So, but I would expect continued volatility. I think it's a mistake to think we can go through all the things we're going through and the volatility itself will calm down.
Has it been good for JPMorgan? What's your trading revenue looking like?
Yes, because when there's volatility, this is a very simplistic way to look at it. Spreads gap out and traders make more money if there's more volume. So we had both this time, more volatility, more volume. But very often when you have a lot of volatility and spreads gap out, there's much less volume. So you've seen examples where there's good volatility and there's bad volatility. This one happened to be good. The next go around may not be so good.
JPMorgan CEO Jamie Dimon speaking to Bloomberg's Francine Lacroix at JPMorgan's annual Global Markets Conference in Paris. And coming up, we discuss the ins and outs of President Trump's visit to the Middle East from a security as well as economics perspective. That's coming up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Giga Gulf. The U.S. announces a 5-gigawatt AI data center plan with the UAE as President Donald Trump rounds out his tour to the Middle East with another $200 billion worth of deals. No deal. Trump says nothing will happen on Ukraine until he meets with Russia's Vladimir Putin. And JPMorgan CEO Jamie Dimon tells Bloomberg he is not going to take the chance of a recession off the table as erratic trade policy continues to heap volatility on markets. It's just gone 8:30 a.m. across the Emirates. I'm Jemana Versace back in Dubai after quite a hectic week. We're rounding up the discussions around President Trump's visit to the GCC. He's in the UAE here today in Abu Dhabi for his final hours of the trip. And what a trip it has been. We're going to be summing up some of the major highlights with Rachel Ziemba in a moment. But for now, let's take a look at markets. Not doing a lot today. S&P, NASDAQ leaning sideways, though we had a better end to the session yesterday. Some weak data coming through, though, on retail sales and PPI, surprising to the downside. Those are wholesale prices. And on the back of that, you saw a bit of a rally in 10-year yields down about 10 basis points. The market now is pricing in 2 rate cuts for the end of this year. And then Brent, you can see some stabilization coming through. We're sitting just shy of $65, about 0.2% firmer on the session. Yesterday, we sold off after President Trump said they were close to getting to a U.S.-Iran nuclear deal. Today, stabilizing. For the week, we're eking out a gain gain of 1%. But of course, oil still down substantially over the course of this year, down 10%. Okay, let's also check in on Asia currencies. Avril Hong is in our Singapore studio. Avril, what are you looking at today?
Yeah, FX, as you say, I mean, tracking that against the backdrop of these dollar weakness moves, right? And Asia currencies have mostly been appreciating from the start of the week till now, including on the Korean won, the Taiwan dollar, that really have been sharp appreciations since the start of April. Today, holding fairly steady. The Japanese yen is also in focus because we got data out of the country which showed that it was shrinking even before the tariff hit. So this might complicate things for the BOJ's rate path. We had a board member weighing in, Nakamura, and saying that rushing to hike rates now may be something that could crimp consumer spending. So sounding quite dovish, but that being said, there's also, as our MLive colleagues have been highlighting, something that Governor Ueda has also been talking about, that dovish tone, right? So just a bit of a repetition, reiteration, maybe not really moving the needle that much. In terms of the FX reaction, we did see a bit of those gains on the yen from earlier given up following Nakamura's comments, but cited as a sort of knee-jerk kind of reaction. Keeping an eye on dollar, China as well, we're seeing it's holding just below the 720 handle. Jumana.
Avril, thank you so much for the overview. Avril Hong in Singapore. Well, President Trump has wrapped, or is in the process of wrapping up, a whirlwind trip to the Middle East, visiting Saudi Arabia, Qatar, and the UAE. Trump has left with investment pledges topping $1 trillion. Not only that, but the trip has included controversial gifts and a major shift in U.S.-Syria policy. To discuss further, joining us is Rachel Ziemba, founder of Ziemba Insights. Well, so much to discuss, Rachel. Maybe let's just start high level. Would you say that this trip was a success for both President Trump and the Gulf countries?
Yes, I think so. You know, a lot of work went into making this trip a success. We see that in the scope of the deals that were announced, many of which probably took months to be announced. Some of them still have details to be worked out, as with some of the other deals that are being announced. But I think the comfort level with the leaders, you know, the message, I think the White House has to be seeing this as a success. And I think that the Gulf countries have to be seeing that too. We saw him unveil a sort of shift in rhetoric towards the, you know, so towards the region, you know, and yes, you know, pledges to invest as we expected. I think as you've covered well on the program, I mean, one of the big surprises was the outreach to Syria, and countries in the region, and even those, including countries he didn't visit, like Turkey, have to be seeing that as a success as well.
Yeah. Let me just bring it back to the numbers. We've got huge pledges, whether it's that 600 billion figure in Saudi, which the Crown Prince has said they could try to shift to 1 trillion, 1.2 trillion economic cooperation in Qatar, $1.4 trillion over the next 10 years from UAE. These are all economic pledges, right? But the backdrop to all of this is the price of oil. Oil prices is a lot lower. We know in the case of Saudi Arabia, they are running a budget deficit, a current account deficit. Are these numbers actually achievable, or are they just headline commitments?
Yeah, I think these are headline commitments and a direction of travel. I doubt we're going to see the exact amount of new money that is being pledged, especially those that are in the, you know, $500 billion or sort of plus $1 trillion sort of amount. I do expect, especially for Saudi Arabia, there'll be more switching within their U.S. dollar portfolio. Saudi, you know, we're talking about funds that are some of the biggest investors in the U.S. already, but moving within those assets. It may be a bit easier for countries in the region to shift around some of their imports. The other thing that's important as a challenge is that the U.S. has to be ready to accept the investment, and there have to be strong commercial terms as well. And so to that extent, one important piece of news I saw this week was a goal to streamline trusted investors, make it easier for them to navigate the CFIUS process, the National Security Review process. Gulf investors have really been hitting a wall with some of that process in recent years, and it remains to be seen how the Trump administration will change that. But the will is definitely there. But Saudi Arabia in particular is going to be investing more at home. And the countries in the region, Abu Dhabi, Qatar, these big pools of capital, they are looking at opportunities in the US, especially in light of the tariff dynamics, but they're going to continue to look around the world. So, I think these are a sign of the interest, the direction of travel. And I'm particularly watching what happens on the AI side and whether the U.S. follows through
Rachel,
on its goals.
Let me ask you about the AI side. I thought the announcement yesterday in the UAE was really huge and significant. The fact that they're looking to build an AI campus with 5 gigawatts worth of capacity. I don't think there's any other data center in the world that is targeting that much capacity. What does that tell us, one, about the region's AI ambitions, and two, the U.S.'s willingness to cooperate with these Gulf countries on helping them push forward with these ambitions?
Yeah, I think the ambitions, as you say, are really large. That was palpable to me when I met with some key players, sort of really trying to drive AI and the innovation economy a couple of months ago. I think the U.S. is really looking to do a couple of things. One, make sure U.S. innovation is driving AI going forward, to make sure that countries like the UAE don't rely on Chinese hardware as they're doing that, and is looking to make sure that any efforts that take place in the UAE, that there also are sort of more energy, more data centers, more innovation in the U.S.
Yeah. Rachel, always good to have you on. Thank you so much for getting up early for us.
Thanks for
Rachel
having
Ziemba,
me.
founder of Ziemba Insights. Now let's get more on Donald Trump's consequential tour of the Middle East. From deals to diplomacy, the U.S. president has made his mark on the region. Now, to hear her take, we're joined now by Dina Esfandiari, the Middle East geoeconomics lead for Bloomberg Economics. Really good to meet you in person, actually. We've never met in person. Let's just maybe focus in on some of the political dimensions and ramifications of President Trump's trip. We just briefly, with Rachel, were talking about bringing Syria into the fold, the fact that President Trump sat down with Ahmed al-Sharaa. How do you see this as one step towards a realignment of the power play right now in the Middle East region?
I mean, we're in a really significant moment right now. A lot of things have changed over the course of the last 3 days. A lot of promises have been made, and not just small promises, big ones. The idea of lifting sanctions on Syria, that's not inconsequential. It is a huge deal for Syria, which would not have been able to evolve, grow, or have any chance at success as a state without those sanctions being lifted. So it's good news. Today's Middle East is a different Middle East.
Yeah.
And for now, it looks like a broadly positive change. The question is everybody going to be able to deliver on the pledges that they've made?
Yeah. What do you think about President Trump saying that he does actually want a deal with Iran? Him saying he doesn't like war, he'd rather have peace. And yesterday in the press conference, Doha said they're very close to getting a nuclear deal across the line. What do we understand would be in that deal? How would it be different from JCPOA?
So firstly, Trump has never hidden the fact that he wanted an agreement with Iran. He just wanted him to be the one that brought the agreement home, which is why we are where we are today. And I think we're at a time where the Iranians also want a deal. It's important for them to get out of the slump that they're in economically, to get out of this isolation that they're in increasingly. And so for them, the deal is significant. What would be in it? I think broadly both sides are in agreement about a compromise, except for one thing that is a U.S. ask, which is whether we're going to settle on zero enrichment or whether they're going to be all right with Iran having some enrichment on its soil.
Yeah. What do you think about the backdrop of oil prices with all of this? And the 3 countries that he visited have been very clear on their attempts to diversify the economy and successful. So with oil prices lower, are they going to be able to follow through on some of those commitments?
Well, that's the million-dollar question, isn't it?
Trillion.
Well, $1 trillion, exactly. That is the question. I think they will be able to follow through on some of it, but I think it's doubtful that they're going to be able to follow through on all of it. But you have to realize that ultimately what matters, whether it's for Trump or the Gulf Arab states, it's these huge headlines that we've been seeing over the course of the last 3 days. That's what they want. They want the press. They want the fanfare. They want the show. And really, it has been a show over the course of the last 3 days. So that's what's critical for them. And in that respect, everybody has walked away from this trip a winner because the UAE, Qatar, Saudi, open for business now.
I would say, just on the imagery, it was a very powerful image yesterday of seeing President Trump take a trip through the Grand Mosque of Sheikh Zayed. And he was himself in awe of how beautiful the mosque is, and does speak to how also beyond anything else, there's cultural diplomacy taking place, which I think is important for the region too. Yeah. Dina, thank you so much.
Thanks for having me.
Dina Esfandiari, the Middle East economics lead for Bloomberg Economics. Now, President Trump's flurry of AI deals during his tour of the Middle East is opening a rift within his own administration. China hawks are growing increasingly concerned the projects are putting U.S. national security and economic interests at risk. The Trump team has worked out agreements for parties in Saudi Arabia to acquire tens of thousands of semiconductors from NVIDIA and AMD, while shipments to the UAE could top 1 million accelerators. Some senior administration officials are seeking to slow down the deals over concerns the U.S. has not imposed sufficient guardrails to prevent American chips from ultimately benefiting China. Coinbase shares have slumped in New York after facing a double whammy of hacking and an SEC probe. The largest U.S. crypto exchange said hackers bribed its foreign employees to steal customer data and demanded a $20 million ransom, which it refused to pay. The breach may cost as much as $400 million to remedy. Meanwhile, Coinbase also said it is cooperating with an SEC probe into whether it has misstated user numbers. And coming up, how President Trump's America First policies are pushing African startups to seek new backers. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Versace in Dubai. President Donald Trump's America First policies are forcing African startups to find new sources of funding as U.S. aid-supported projects close and venture capital from the United States becomes less certain. For more, Bloomberg's Ondiro Ganga joins us now from Kigali, Rwanda. Ondiro, talk to us about the reality of these U.S. funding cuts and how it's impacting the African startup ecosystem.
Hi, Jumana. So just for context, the African startup ecosystem has been booming for the last decade. And in 2021, we saw them raise a record $5 billion from the U.S. But since then, we have seen that money begin to decline. And a couple of factors can be attributed to this: higher rates in the U.S., a strong performance of the public markets. And this means that funders can still get high returns while betting on less risky bets. And African startups are considered very risky. And then this coupled with the fact that immediately President Donald Trump came into power, USAID evaporated into thin air together with the $1 billion that it was using to support startups across 6 African countries. And now startups are finding themselves in a funding dilemma. One of those startups is OCO, that issues disaster insurance to farmers, and they had to let go of their staff because 75% of their revenue came from USA. They had to let go of their contractual workers in Mali. They had to reduce their staff who were working on USAID projects. Another startup that has been affected is Basigo in Kenya, $1.5 billion gone. And they only managed to raise a quarter of that amount to go into their Rwandan business. So now African startups are having to face a new reality. These are startups that deal with so many challenges, including funding, and 70% of them fail. Moving forward, they have to contend almost with a low funding environment. Early stage startups have to deal with little capital, and also late stage startups will have trouble raising additional revenue.
Okay, so assuming this funding is beginning to dry up from the U.S., what are alternative sources of funding that these startups could lean into? Are there alternatives?
Absolutely, Jumana. There are alternatives. They can look at markets like the Middle East, Europe, Asia, but most importantly, they can look at Africa. In a survey that was done by Bloomberg, 34% of investors came from the U.S., but 46% of them came from Africa. And this means that there's potential to look at Africa to raise resources to try and plug into that gap. Markets like Middle East, Europe, and Asia are also going to be very attractive. We are likely to see some of these founders begin to make those trips, but it's not going to be a walk in the park. One of the founders of Freezelink, a Ghanaian startup, was telling Bloomberg that they do not have relations in this market, so they have to start building relations in this market. Is it going to be easy? No, but the impact of African startups is undeniable. They invest in energy, healthcare, and also stand in the gap where they're deficient infrastructure. So while it's going to be a long work in the park to get more funding, it will take them a longer time to reach profitability, they still have a solid pitch to go back to the market with.
Bloomberg's Ondira Ganga in Kigali, Rwanda. Thank you so much for the reporting. Nigeria's annual inflation slowed in April, coming in at 23.7%. That's compared with 24.2% year-on-year in March. And more than 4% in the naira dropped against the dollar since April, driven by a slump in the price of oil. Nigeria's main export has been offset by a cheaper gasoline and food prices, and the inflation reading may persuade the central bank to pause the key interest rate for a second time in a row at a record 27.5% on May the 20th. Coming up, hopes for a breakthrough when Ukraine peace talks fade as EU leaders meet in Albania. We're there live with the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Hopes have faded for a Ukraine ceasefire after Vladimir Putin sent a low-level delegation to talks in Turkey, while attention has shifted to fresh sanctions to bring the Russian leader to the negotiating table. Let's go straight to Bloomberg's Oliver Crook, who's at a meeting of EU leaders in Albania, where the war in Ukraine is obviously still dominating the agenda. Ollie, just talk us through how European leaders are viewing the meeting that's taking place in Turkey today and tomorrow, how they're looking to get involved, especially given hopes of the ceasefire are now dimming.
Yeah, well, Jumana, as you know, since the very beginning of these conversations with the Trump administration, the EU leaders have really been sidelined in all sort of negotiations. As far as Ukraine is concerned, they've been trying to get a seat at the table, most recently doing so the other weekend when a delegation of Macron, Merz, Starmer, Donald Tusk all went to Ukraine, had a big conversation with Zelensky, got Donald Trump on the phone, apparently got his sign-off to propose this 30-day ceasefire, which Putin immediately rejected and said rather he'd like to have these talks in Turkey, which culminated to those talks theoretically that were supposed to happen yesterday, but Putin himself did not show up, right? And that has sort of been the sort of crux of the issue here. At what level are there going to be actual talks between the Ukrainians and the Russians? And all the while, the Ukrainians trying to give the impression to Donald Trump that they will never be the impediment to peace. So we understand that those delegations did not have a meeting yesterday. We understand that they potentially could have a meeting, but as you mentioned, this is a very low-level delegation from the Russians. We'll be speaking to the deputy head of Zelensky's office a little bit later today at the sidelines of these meetings. He was in Turkey to get an update on actually what we can expect. But of course, another person that was there is Marco Rubio and also Lindsey Graham. And Lindsey Graham is the sponsor of this next round, potentially, of sanctions from the United States on the Russians, one that would really target their oil and gas refining and all of the sort of third-party countries that are still funding, basically, Russia's war by buying all of these products. The question is this snub by Putin going to be enough really to prompt Donald Trump to want to move forward on those kinds of sanctions? We're probably a little bit too early for that, but this will be the conversation among leaders here in Tirana.
Ollie, let me just ask you as well, on the trade front, there doesn't seem to be a lot of progress between the U.S. and EU. It hasn't really come up. And we talk about progress with China, with India. What is the situation there?
Yep. So what I think is interesting is it seems almost like European leaders and the American leadership are really speaking completely different languages. Both sides are seeming to be frustrated with the other because they're not sort of expressing clearly from the EU kind of what the EU is offering to the United States. And from the EU side, they're frustrated from the U.S. because they're not really clear on what the United States wants. And that's kind of the deadlock that we've had back and forth between the EU and the United States. And so to the point where we heard from Scott Bessent, early in the week, saying that basically the EU is falling further and further down the line. And of course, this is such a critical trading relationship, both for the EU and the United States. About $1 trillion every year in trade goes both ways. And so it's really one that they're going to have to really nail for both sides in order to be satisfied. We understand that we will get another proposal that is going to be put forward by EU leaders, EU trade negotiators from the Commission to the United States, again, trying to address some of these non-tariff barriers. Will there also be proposals potentially about long-term LNG contracts to buy from the United States? That is one thing that is going to be on the table. But again, Juman, I think that the entire thing, and you probably saw this on display when you were traveling with the president over the last few days, is the Trump administration is running all of this like an audition, basically asking everybody to bring something to the table.
Absolutely. Bloomberg's Oliver Kirk, thank you so much. And that was it for our show. It has been a momentous week with Trump's trip around the GCC. We have brought you coverage from all of those locations. So it has been really quite a momentous one. The coverage will continue throughout the rest of the day. Stay with us. Daybreak Europe is coming up next.